Right, I just want to accompany that very short video that I made over euro dollar. It was a trade I took in the gap time well, uh, yeah, at the end of the equities window in London, um, end of equities opening in London. So basically, let's quickly recap this. We had a uh, peak formation inside day on day one on the downside. This proceeded to break the week high. Um, fun on the geopolitical side. So we had a break of the weekly high, the week's high, last week's high on day two. Day two runner up into potentially the high of the week. Now I was in anticipation of. Just quickly on that subject of rallying, when I was trying to fade, um, in what session would it have been in my session? So New York. Yeah, I was trying to fade over here somewhere. Um, don't do that. We do not try to short when we are on the inside of the support line. So there is no reason, only short when we're below it. So that's a rule that I've picked up from one of Stacey's videos in terms of his strategy. We don't short, we don't fade unless we've broken the trend line. So there's the trend line. Bosh. Right. So there you go. Anyway, so we moved up into the high of the week, potentially. What I was concerned for on this break of the trend line, where I was shorting it, because I did put a trade in here, which ended up break even. I moved the stop loss to break even because I was thinking, well, all right, we've had a peak here. I can't remember where I started again, the bombers. I think, yeah, I think on this break of structure here, I started to short it. So, and I was worried for the move up, and there we do. And my stop was a couple of pips below those highs. So, and I was thinking, well, this could even extend up trap breakout traders up into the above the figure, pulling in day two and very committed day one longs um, into here before the move lower. Anyway, had I stayed with that trade, well, that would have been a colossal almost 10R. Um, but anyway, um, so I got in at the end of the equities hours here. It's not something that, I mean, if you were trading London, you would have probably got in here. Um, I mean, you might have got in um, on the break of this structure. I mean, you've got the peak formation there and then that breakout, and you would have been just shorting at any point in here. Um, I broke, I shorted in here. Um, Now, in terms of, because I wasn't at the screens until over here, in terms of the US session, um, my theory of needing to see an M formation uh, has been nullified by Stacey's video today. He talked about shorting on this green candle. I'm pretty sure of that. Let me pause that and check again. Yeah, what he's saying is that he moves down. So he waits for the first hour generally, I think. Um, so which would make sense because we're waiting to see if this is going to break, right? So let's replicate that. Replay. 1 minute chart. Da, 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 da. So he waits for the first hour, which is there. And he's saying that he's notes this. So you do have the M formation, but it's on the lower time frame, obviously. So you've got the M formation peaks. You've got the price that's moved back up into these peaks. So let's just forward this. So he's basically saying he just wants to get in above the numbers, above the zeros. And if we were in this, so 7 o'clock, you might want to wait for a micro M, and there you've got the pin, you've got the engulfment. So just get in and put your stop above. That's all you need to do. So had you done that anywhere around target down at last week's low. You've got that low over here. We've got the equities US session lows. That would be my break-even point. Let's play this out. Might not make it to the lows. I can't remember. Right. There you go. Wash. So, 6R in an hour. Now, for the day ahead, being Thursday, we've got this scenario of, let's bring this to where we are now. So we've got the run up to non-farm payrolls. Right, yeah, the run up to non-farm payrolls on Friday. You've got this W formation. Isn't necessarily going to hold up in this downtrend. So the thesis is, well, I mean, it's the neckline is holding at the moment, but it's not to say that we can't have a break lower towards the low of the week so far on a break of 98, targeting 97.50. If, on the other hand, this holds, then we're up in 99 again pretty quickly. Looking over at the US dollar, it's had a correction from the highs of the day. That's a pretty decent correction. So it looks like the downside is still in play with this one. So dragging the euro lower as per the prior thesis, and then US yields. As I said in previous videos, made no sense that the dollar was on the back foot when yields were effectively robust bombs. We had this scenario play out that I talked about, and they just went on a tear. Now they're into resistance. You've got that M formation heading higher into the neckline, above structure, up towards what you call it, these highs over here. So still bullish on the dollar, which was my thesis at the start of the week. Besides a couple of days of nonsense sentiment, really, it's been it's been spot on, really. So we had, as I was saying, we were heading higher to sell low in the euro and dollar crosses. So That's played out nicely.